A unique and provocative look at today's current events. We provide the answers and a better understanding of the world around you. So catch Therapy Cable Live, Monday through Friday from 12 to 2 Pacific Time on therapycable.com. Well, it's time for our economic update, and here again is Stephen Vanilli, former portfolio manager. He managed over $500 million in assets. So let's welcome to the show, Mr. Vanilli. Welcome back.
Oh, thank you, and good afternoon, or should I say good morning to you.
So we've had a heck of a week, not only in politics, but in economics. What's going on out there?
Well, today you had the release of inflation numbers, which were reasonably tame when you take out food and energy out of it. But there was something very noticeable there raises a little concern, and that was there was a pretty good increase in medical cost inflation. And what's important about that is the aging population.
Yeah. So the medical cost, there's an inflation there. Now, the core CPI, that's with excluding oil or gas and food. How was that?
Food and energy. 2.2% rate.
Is that low, right?
Well, now that's on a 12-month basis. The Fed is shooting for a 2%. Okay, so that's just about where they are. So that's close, and it's not bad. But if you look at it just for the month, it was 0.3% ex food and energy. So you annualize that, you're talking about 3.5%.
Oh, okay. Let me go back to that comment you made about the medical costs. What's a concern there in regards to the economy?
Well, Carlos, I think the concern, at least to me, is that if you look at the population and look at by age, those that are 65 years and over is close to 15% of the population. And clearly, that is going to be increasing, obviously, because of the baby booms.
So that's taking away more of their spending money? Is that what happens?
Well, it'll take away more of their spending monies, but it'll be a social cost as well.
Oh, that's true. That's a good point.
I mean, a lot of people may not have the money, and so society is going to have to pick up the cost of some of these people.
Or Bernie, that's right. Bernie's going to pick up the cost. That's right. I forgot about that. Sanders yesterday was talking about that. I don't know if you got to see Sanders in his town hall meeting yesterday, but he was discussing that.
Yes, I did.
Yeah, he was saying that there's people out there was a question that's actually kind of interesting. They asked him about rationing health care in other countries, and he said, well, there's a rationing going on here. There's people can't even afford their medications.
That's a problem. It is a problem, and so as problems like that arise, medical costs in all forms become a greater percentage of the total economic cost.
Good point. Let me ask you this question. There was a couple other numbers I was watching during the week, and I wanted to get your take. It looks like we're on a downward trend again on jobless claims.
Yes, it does. But 1 or 2 months does not make a trend. Let's put it that way.
So you still think it's kind of just right, maybe consolidating right now?
I would tend to think so. Yes, I would. Yeah. That's the way I would look at it. But I think one of the important numbers that have been out this week basically relates to corporate profits, and they seem to be running okay.
Okay.
Yeah, I mean, if you're looking at the earnings of the Standard & Poor's 500, trying to relate that to the stock market and other things, the earnings seem to be coming along pretty well, although the valuations in the stock market are getting up there. They're not in the rarefied area yet, but they're getting up there.
So that seems to be the common theme, right? The economy is just okay right now in general.
In general, I think that's probably a good description. It's okay.
Not too exciting, that's for sure. Let me ask you this question. I know something else. How important is it? I was looking at the oil inventories yesterday. They went up to 2 million, I think, for the week. How important are those numbers?
How what?
How important are those numbers?
Well, they become very important when you start looking at the price of energy. I mean, we've all been at a gas station recently, and prices continue to have come down quite a bit in the last 6 to 12 months.
Hey, that's interesting.
And that'll stay down as oil inventories stay high.
Okay. You and I were having that conversation before. It kind of surprised you that with gas prices going so low, that consumer spending wasn't going up as much.
Quite true. Quite true. That's an intriguing situation because household discretionary income is obviously increasing because the cost of energy is going down. So they've got more to spend on non-energy items, but they don't seem to be out there spending it, such as restaurant sales and things like this are not all of a sudden running very strong.
Is the savings rate going? Is the savings rate going up? Is that where the money's heading? Where do you think the money's going?
Yes, historically the savings rate has been in the area of about 3.5%, and recently in the last few months you're getting close to 7% now.
Almost double.
Yeah. Well, that again gets back to the fact of the aging population. They want to save more and more.
Does it have anything to do with potential fears of, some of these news shows are saying a potential recession, the economy slowing down? Is that something to do with it as well? They're trying to protect themselves or hedge themselves for the future?
Well, yes, I think that definitely is a factor. I mean, if you're, let's say, 65 years old and you're retired or soon to be retired, your opportunities to go back and earn a lot of money if you lose it, or if inflation takes off on you, is very, very limited. And so people are going to be very careful about what they're spending.
That's an excellent point. Excellent point. What's going on next week? What do you see next week? Anything interesting in reports or anything that you see is going to pop up next week we should be keeping our eyes open for?
I think the thing to watch next week, because you're not in earnings season on the stock market, but I think looking at the market, watching stocks, what their behavior is something to keep an eye on over the next couple of weeks, because you've come through a period of consolidation, let's call it, and the market may break one way or the other, and you just don't know at this point in time.
I know you don't only deal with fundamentals; you're also a technical guy. Technical saying anything to you?
Yes, they're basically saying what I just said. They can go one way or the other. It's the technicals are really not pointing strongly in one direction or the other.
Oh, that's fascinating.
They're basically in neutral.
And right now, I was just looking, I just got a little CNBC breaking update. Looks like oil's plunging 4% today. Did you expect that after that supposed deal that Russia, Saudi, Iran, Iraq were going to do in regards to cutting production? Did you expect that little boom to kind of fade?
Yes. I mean, that's such a political issue, international political issue, and there's such a lot of talk. I mean, you can't really, just be quite frank about it, you can't believe one party or the other as to what is really going on.
That's the truth. All right, well, we're almost done with our economic update. Any other insights before we go?
Just the market looks, you got the market that's year to date down about 6%, and I would be keeping my eyes closely glued to the market because there may be some opportunities coming down the road.
Sounds good to me. Stephen Vanilli, here he is, giving us our economic update for the week.